Today I want to do a quick review what happened today. I did a trade on ES today and I did a long trade on this bullish engulfing candle. That bullish engulfing candle was produced at 9:40. Yeah, I'm just checking NQ didn't produce that bullish engulfing candle. Now, it wasn't like a proper trade, it was more like a testing trade. So my bias was long and I was waiting for a sign to go bullish. There was an SMT at the lows because at this time NQ took already the lows of today's day and ES didn't take it, and now we had the price going a bit up, so that is a bullish SMT. Now in terms of the trade, it wasn't like a trade, it was a testing trade. So I went long here, around here. Once this candle was closed, I went long around here, put the stop loss here, and my take profit was around here. So it was around 2 to 1. Now I don't find a big issue with that, regardless that I was very skeptical with it, because if I replay the replay, the 1 hour candle, this one, when it closed, is very bearish. 15-minute was like uncertain bearish, but yeah, it was bearish, and 4 hour was going, it wasn't fully closed yet, but it was going to close, and here it has produced a very engulfing candle. So my take is doing a testing trade is fine, and the testing trade is putting an amount of money that you want to affect your P&L, and it's very small. Now the capital I got on my cash account is quite small, and it's around a couple grand. So what happened is that I put trades of $100 or even $50. Doing a testing trade that make me lose $40, there is a mistake there. I didn't break any rules because one of my rules is maximum risk per trade in a testing trade is $50. So I need to start risking more of my trades, and I'm going to put it up to $150 and $100. But at the moment, I cash out some of the profits from previous week, so I want to make win few trades, and from there I will start implementing higher risk per trade, $150 in A plus setups, A setups, and $100 in the standard setups. So when I do a testing trade that it will be maximum $50 or below, it won't affect me that much into my P&L, but still it does affect me because it's half of the risk on a regular trade. So I will have to think about that, but that's the next step forward to do that. I don't see any issues putting here a testing trade. It was a very aggressive testing trade, and it wasn't even a trade, so I'm happy with it. And I was very fully aware that this is a shift in market structure to the bearish side with a bearish fair value gap, and I decided to go long. It didn't go my way. I was expecting to do that, but that's why you have testing trades, and it's just to manage the capital in a better way and be more aware of. I only put one contract. I cannot even risk less, so it's going higher on the trades where I feel confident that I put the trade. So that's my review for that. Now for tomorrow, all the market structure for ES, from monthly to weekly, is bullish. Now daily, that was the target for me. Daily we are in a situation where we're still bullish. Now 4 hour is not bullish anymore. Why? Because we have taken intermediate term low. So it's a situation where I have to be cautious. Market is not that easy anymore. You don't have a clear trend, and we are kind of like in a consolidation stage. My goal will be to see how we open London and how we develop. So if I see a clear path from London, even if it's bearish, I will take a trade, but in this case, obviously risking a bit less. You got a bearish engulfing candle here in the 4 hour, and you got a shift in market structure. So once this swim low is broken, like you see here, but clearly here with the body and everything, that is a bearish shift in market structure. That is a bearish engulfing candle, and taking this low, it puts me in a position where I am looking not for longs. I'm indecisive, but obviously if I'm short-minded thinking, yeah, we're going for shorts. So let's see what Monday tomorrow offer us during London, and if London give us a trade to the downside, I will look for short trades, but we're being very cautious. Now, if we look ES is way more bearish than ES. Market structure is bullish monthly, weekly is consolidation, clear consolidation, but the market structure is bullish. Now daily, we're pretty close to take this intermediate time low. And if I take shorts, I would rather go NQ for shorts. NQ has been going way more bearish than ES, and I think this low, definitely NQ might take it. Taking this sell side liquidity might go up or might consolidate, or we might keep going down. Now, if we don't take this low, but we have kind of a technical indication that we're going short, this will be a very nice take profit. So if I delineate it here, this will be a very nice target. Now we're very close from the target. So we are very, very close. I don't even know we will have that opportunity to get there. Now it depends how we break it. This could be the next target. And if we break that, this could be the next target. And we could go what I thought long time ago we were thinking, to go all for the support here, fill this fair value gap around here. My main target will be here. Now, is it going to happen? I don't really know. But anyway, that is the point I wanted to make. Now, I'm not bullish anymore, especially for NQ, but both of them, ES and NQ, I'm not bullish. Even NQ, I am more towards bearish, and NQ is moving way faster than ES to the downside so far. And we had the bearish SMT divergence on the highs on the 4 hour that I did show prior, and this is SMT divergence on the 4 hour, and obviously on the daily too, but 4 hour looks very well. How we took all this, and because we took all this buy side liquidity and NQ did not take that buy side liquidity, and the way ES took that buy side liquidity very shy, like just took a bit and now starts going down, that is a bearish indicator to me. Now, are we going to go bearish tomorrow? Well, let's see how London develops. I will look for bearish through NQ. But that's all for you guys today. Good luck and have a safe trading.